All right, buckle up because we're diving headfirst into the dynamic world of Forex today. We're talking currency strength, those exciting peaks and dips that make this market so thrilling, and how a snapshot in time can reveal potential trading opportunities. We're zeroing in on a specific MWLRCT currency strength snapshot taken during the Tokyo/London session on September 18th, 2024. Think of it as a quick but insightful glimpse into the market's mood, what's hot, what's not within that 6-hour window. And let me tell you, this snapshot is serving up some serious drama. Right off the bat, we see the Japanese yen, the JPY, flexing its muscles as the strongest currency in the lineup. But on the flip side, the British pound, the GBP, is looking tad, shall we say, delicate, finding itself at the bottom of the pack. Now, before we get lost in the technical weeds, I've got our expert here to help us break down what these rankings really mean, and more importantly, what might be driving them.
What's intriguing here is that these rankings aren't just arbitrary numbers. They're like clues hinting at the intricate economic and geopolitical forces at play. Take the JPY, for example. Its strength could stem from something as concrete as, say, the Bank of Japan hinting at a policy shift, or even escalating tensions in the South China Sea, prompting investors to seek the yen's relative safety.
So it's almost like a knee-jerk reaction to global events, sending investors scrambling for a safe haven.
Exactly. And on the other end of the spectrum, you have the GBP looking a bit shaky. This could be due to a cocktail of factors: lingering Brexit uncertainties, disappointing manufacturing data released just this morning, or even whispers about potential political shakeups within the UK Parliament. All of these factors can chip away at investor confidence, impacting the pound's performance.
Okay, so we've got the JPY feeling the love, the GBP feeling the heat, and a whole lot of potential reasons why. But let's talk about what you, our listener, really care about. Where are the potential trading opportunities in all of this? This snapshot breaks down which currency pairs are screaming buy or sell, based purely on this strength differential. And believe me, some of these pairings are practically begging to be analyzed. On the bullish side, we've got pairs like AUCAD, AUCHF, AUDNZD. Are we sensing a pattern here? Looks like the Australian dollar came to play today.
It certainly seems that way. That strong showing from the Aussie dollar could be linked to several factors: a surge in gold prices, given Australia is a major gold producer, or perhaps renewed optimism surrounding China's economic recovery, which would be good news for Australian exports.
It's all connected. We've also got EURCAD, EURCHF, and even EURGBP showing some bullish potential. So the euro is not backing down either, huh?
Not in the slightest. It seems the euro is finding strength against certain currencies, particularly those facing internal headwinds like we discussed with the GBP. It'll be interesting to see how these dynamics evolve as we delve deeper into other pairs.
Now, let's switch gears and talk about those pairs flashing red, the bearish ones. Get ready, because we've got quite the lineup. AUJPY, COJPY, CHFJPY. Looks like even the mighty Aussie dollar isn't immune to the bear's grip. Then we have EURGPY, EURNZD, GBPN, GBPN, GBP FATE, GBPCJP, NZDJPY, and boy, the pound is really taking a beating here. And let's not forget GBPJPY, GBPZD, GBPUSD, NZDJPY, and finally USDJPYY.
That's a rather extensive list, and what immediately grabs my attention is the sheer prevalence of JPY as the common denominator on the stronger side. It really underscores the yen's dominance during this specific window, making it a potentially attractive option for traders seeking to capitalize on its upward momentum. But remember, momentum can be fleeting in the Forex market.
All right, so we've got a sense of who's up, who's down, and the potential whispers behind those movements. But with so many currency pairs on the table, it's easy to get overwhelmed. So let's narrow our focus a bit, shall we? Instead of trying to boil the ocean, we'll zero in on the pairs showing the most dramatic strength differences, those screaming, "Trade me," the loudest. It's about quality over quantity, right? So let's start with those bullish champions. Any pairs standing head and shoulders above the rest in terms of potential?
Absolutely. One pair that immediately jumps out is NZDCHF. We're looking at a strength difference of over 11 points that's significant. This suggests strong upward pressure on NZD and/or weakness in CHF, making this pairing incredibly appealing for bullish traders. Another noteworthy contender is AUDCHF. With a difference exceeding 21 points, it's clearly signaling potential bullish momentum, likely fueled by the same factors we discussed earlier regarding the Australian dollar strength.
AUDCHF and NZDCHF are bullish heavy hitters. But what about the other side of the coin? Which bearish pairs are setting off alarm bells?
Two words: GBPJPY. This pair is waving a giant red flag with a staggering negative difference of over 45 points. That magnitude really hammers home the potential bearish pressure on this pair.
It's like watching a car heading towards a cliff. You know it's not going to end well, but you're not quite sure when or how it's going to happen.
Precisely. And another pair worth mentioning on the bearish front is CHF-JPY, with a difference exceeding 44 points. The consistent weakness of CHF against the robust JPY makes this another potential candidate for bearish strategies.
Now, before we get lost in the excitement of these major movers, let's take a step back and do a deep dive into two specific pairings highlighted in the source material. AUDJPY, our bearish frontrunner, and NZAD-CHF, our bullish champion. So starting with AUDJPY, what's the story behind this bearish signal? What's happening beneath the surface?
Well, remember how we discussed the JPY's safe haven appeal? When global markets get jittery, investors often flock to the yen, boosting its value. Now, couple that with the fact that Australia, as a major commodity exporter, is often viewed as a risk-on play. Its economic fortunes are closely tied to global growth in commodity prices. So if there's even a hint of uncertainty in the air, like, say, weaker than expected manufacturing data out of China, a major trading partner for Australian investors might shy away from the Aussie dollar, sending AUDJPY on a downward spiral.
So it's a double whammy for AUDJPY.
Yeah.
That's a strong JPY amplified by a potentially weakening AUD. Okay, that makes sense. Now let's flip the script and examine NZD-CHF, our bullish superstar. What's fueling its upward trajectory?
One plausible scenario is a surge in risk appetite among investors. The New Zealand dollar, much like the Australian dollar, tends to benefit from periods of global optimism. If investors are feeling bold and bullish about the global economy, perhaps driven by positive news from the U.S. Federal Reserve or strong corporate earnings reports, they might shift away from safe haven assets like the Swiss franc and seek higher yielding opportunities like those offered by the New Zealand dollar.
It's almost like a collective sigh of relief from investors, leading them to take on a bit more risk.
Precisely. And this shift in sentiment, coupled with potential strength in the New Zealand economy itself, let's say, a surge in dairy exports, a key sector for New Zealand, could easily propel NZD-CHF upwards, justifying the bullish signal we're seeing in our snapshot.
It's fascinating how these currency pairs become storytellers, reflecting the complex dance of global economics, investor sentiment, and even plain old human psychology. But of course, no trading opportunity comes without its fair share of risks. So let's talk about the potential rewards and, crucially, the risks of treating these specific pairs, AUDJPY and NZD-CHF. What should our listener be mindful of before hitting that trade button?
You're absolutely right. No investment is entirely risk-free, and Forex trading is no exception. It's a bit like navigating a ship through unpredictable waters. You need to be prepared for sudden storms.
And have a life vest handy just in case.
Exactly. Let's start with AUDJPY. While our snapshot paints a bearish picture, remember, it's just a single frame in a constantly rolling film. The market is dynamic, and factors influencing these currencies can shift rapidly. For example, if China announces a massive infrastructure spending plan, boosting demand for Australian raw materials, that could quickly change the sentiment around the Aussie dollar, potentially weakening the bearish momentum we're currently seeing.
So staying informed is key. What about NZD-CHF? Any potential storms brewing on the horizon for that pair?
Indeed. While the bullish signal is strong, factors impacting the Swiss franc, such as interventions by the Swiss National Bank to weaken their currency, or a sudden flight to safety due to unforeseen geopolitical events, let's say, escalating tensions in Eastern Europe could swiftly reverse the pair's upward trajectory. Remember, the Swiss franc has a long-standing reputation as a safe haven currency, and its movements can be influenced by factors beyond the typical economic data.
It's a good reminder that the Forex market is intertwined with global events in ways we might not always anticipate.
Precisely. In essence, while this snapshot provides valuable insights and a starting point for our analysis, it's just one piece of the puzzle. Thorough research, continuous monitoring of market conditions, and a well-defined risk management plan are paramount for any trader, regardless of the currency pair or strategy they choose.
So don't just chase the green arrows or red arrows blindly. Understand the why behind those signals, and always be prepared for the unexpected plot twists the market might throw your way.
Couldn't have said it better myself.
It's like we're treasure hunting in a financial labyrinth. We've got our map, this snapshot, but we need to be prepared for dead ends, hidden traps, and maybe even surprise or two along the way.
And that's what makes it so exhilarating, isn't it?
Absolutely. Now, as we approach the final leg of our Forex adventure, let's zoom out and consider the bigger picture. This snapshot, while insightful, is just a fleeting glimpse into a constantly shifting landscape.
Exactly. It's like capturing a wave at its peak. We see the power and majesty of that moment, but the ocean itself is in constant motion, with new waves forming all the time.
Beautifully put. So as we wrap up our deep dive into this dynamic world of currency strength and trading opportunities, what's the one key takeaway, that pearl of wisdom, you would leave our listener with today?
That's a great question. You know, if I had to distill it down to one crucial point, it'd be this. Don't be a passenger on this journey. Take the wheel and become a student of the market.
Ooh, I like that. So less following the GPS blindly and more learning to read the map for ourselves.
Exactly. Question everything. Don't just accept the data at face value. Dig deeper, into the why behind the numbers.
Yeah.
Why is a currency surging or struggling? What global events or economic indicators are fueling those movements? And just as importantly, how do those factors align with your own trading strategy and risk tolerance?
It's about connecting the dots, understanding the story those currency pairs are trying to tell.
Precisely.
Yeah.
Because once you start seeing those connections, recognizing the recurring patterns, understanding the forces at play, that's when you transform from someone just dabbling in the market to a truly informed trader, someone who can navigate its complexities with confidence.
That's such a crucial point, because knowledge, especially in the fast-paced world of Forex, is truly power. It's the difference between riding the waves and, getting swept away by the current.
Couldn't agree more.
Well said. And on that note, we've reached the shore of our Forex deep dive for today. Hopefully you, our listener, are walking away with not just a snapshot in time, but a deeper understanding of the forces shaping those currency movements and the potential opportunities they present. Until next time, happy trading, everyone. And remember, stay curious, stay informed, and keep exploring the fascinating world of finance.